Hi, let's talk about image sensing systems. It's a company that develops and markets video and radar processing products for the intelligent transportation system industry worldwide. The market cap is not so big, 35 million. Full information should not consider as investment advice. Based on simple Wall Street, it's trading 23% below the site's estimated fair valuation. On the risk side, highly volatile share price and also profit margins are 8% compared to last year's, are lower than the last year's 47, and does not have, yeah, as I said, not so big market cap but they announced buybacks that made pretty much the stock price went highly up, and yeah, the volumes are increased very much. So if you see here on I can see here only on December 4th, no, actually it's 11th of December last year, the highest volumes were near the 1 million, and currently they're reaching 50 million, 44.9 million. So it's kind of big gap there, and yeah, the valuation side and market performance, 1 year return 68%, not beating the industry, but beats the market. Long-term price volatility, pretty average as the market volatility. 5-year return, we can see here also 183% valuation side. So simple Wall Street have undervaluated the stock price, and fair valuation should be around 8.54. Current price, I think that was the last week, because currently the stock price is 9.76. It raised, yeah, 50%. If I would only be 1 day earlier on reviewing this stock, but anyway, price target based on market watch, it based on 4, so there's like 50% downside, so they went 50% up, but yeah, the normal price is pretty much here. But anyway, the buyback that they announced, yeah, made the stock pump pretty good up. But let's continue. Future growth for the tech industry, 20%. Past performance, company's historical annual earning growth increased by 38%. And financial health, so they are not debt free, so there's a little bit of depth, less than 1 million, and yeah, they do have cash, which is increasing every year, 8 million currently. Equity level is 19.3 million, so debt to equity ratio is less than 5%, which is pretty good. Balance sheet, so there's the depth level, it's not so harm, so it's pretty good. They're not paying dividends, and insider volumes, yeah, there's the buyers. There's one individual that is buying the stock, so we see here only 12 months, and this is pretty much yeah, insiders are most likely to enter the stock, as you can see here, few days on, so 17th November, 19th, 20th, 23rd, then 1 month later. So there's a diversification by time, and yeah, so there's nobody sold. Ownership breakdown, yeah, we can see here insiders holding 30%, general public less than, a little bit less than 30, hedge funds 25, institutions 15. So almost equal proportion for each group. Top shareholders, so on both sides, so some of them increased, some of them decreased, but I do see here, for example, BlackRock and also Vanguard, but unfortunately last reporting holding date were last year's 31st of December. And it is highly volatile share price. If you enter here, there's a lot of risks for the price could drop back, but it also could. So if we see here, for example, I Google it, the whole history since the 95. So actually from its peak in 2007, if we see here one of the peaks, so even here, so it's down 40%, but yeah, for example, so there's a 60, 70, they were, that's actually good review for the stock, for the highly volatile share price. If you see the stock went in a year over 100%, as you can see here, it does not mean that if you are early stage investor that have been investing, for example, 2013, so you're still, actually like few days ago you will be still like minus 40%. So this is actually true what we see here in some of the positions where people are down by like 30% minus, 40% minus. They could possibly hold the stock like as you can see here, 8 years. So if you're investing in a highly volatile share price, in a share that is highly volatile, you could be ready to hold it 8 years, or otherwise you would be selling this, so you will be losing your money. So don't lose your money, and I'm here to prevent that. I'm here to enlighten that that there's a fundamental researches that I'm making that are more boring, but they're most likely to reduce the risks that investors would had. So as you guys like, yeah, we see here Ricardo said that as a new investor, I really appreciate the facts. Thank you for the video. So many appreciates it. For me, I appreciate that too, because with the facts, when I was investing without knowledge, without knowing the fundamental of the company, I made bad decisions. They turn out something like that. I invested in a stock that went down, and yeah, I had to sell in about 30% or even a 50%. I don't remember. It was years ago, but yeah. So that is not likely to happen with any investor, and yeah. Simple safe dividend shows that shares outstanding keep increasing, total sales decreasing, so that's not a good combination. And unfortunately, this company is like had been in market on the market since we see here like at least 95. So we see here that 2011 with the year that it's max year here based on history. So the stocks are increasing every year, total sales decreasing. So what happens to the stock from the 2011? Shares are increasing, total sales decreasing, it falls down. Yes, there is some opportunities. If you, for example, it drops down to 5, you brought here, you wait till like June 2012 and waited to June 2013, you're plus 47. But hold on, if you would invest at like half year or year before, and wanted to 40% up, you would get minus 50, minus 60, minus 70, minus 80. All your capital would be lost. So be aware to investing in small cap companies. And yeah, look at those, like those parametrics: shares outstanding and total sales. This is at least good if you see, if you can get the price less than the insiders have been buying the stock. So if we would, for example, would be in December, we saw that some of the individual buys the stock. It reduced the risks, but it's still risky. And investing.com summarized the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the video one.